this morning, the latest Wall Street losses are raising fears of a bear market.
On Monday, stocks finished the third quarter of 2011 with the Dow Jones Industrials down 12%, the S&P down 14%. CBS News business and economics correspondent Rebecca Jarvis is here with more on the markets for us this morning. Rebecca, good morning.
Hey, good morning.
World markets are down again today. Is this something we can just kind of expect on a day-to-day or week-to-week basis?
I mean, the short answer here is yes. It is looking like a very weak, very volatile picture, not only here in the United States, but abroad in Europe. And so this morning, what you see is down across the board, red across the board. And there's a ripple effect here. When you see international markets, they might not mean a lot to you because our stocks, you're not necessarily invested in these places, but these places all have banks. And their banks lend to U.S. businesses and they lend to U.S. cities. And when those banks and those countries are feeling pain, they stop lending to us. And the problem with that is that their lending in many cases creates jobs, it creates roads, it creates highways here in the United States. So when they pull back on that, we see the ripple effect here.
So that ripple effect, is that why, because as we mentioned, stocks hit a new low for the year yesterday, is that why there is so much volatility?
That's a big part of it, as is the fact that here at home, I mean, we've been feeling this here at home for 2 years now with unemployment near 9%. It's 9.1%. We get a fresh read on it on Friday from the Labor Department, and most estimates are saying unemployment is actually going to tick higher. So that joblessness here is a big issue. Also, like I said, the debt problems in Europe, in the United States, are still this prevailing force, and most policymakers, if you look at what's happening in Washington, D.C., it's a big mess. Well, the same thing is going on in Europe right now.
There's
it's a big mess there. Exactly. And then you have $71 billion that's been pulled from mutual funds. That's our money. That's what people have in their 401ks, their retirement savings. People are pulling it out because they see what's happening in the markets. They're scared, and so they sit on the sidelines.
What are the chances we slip into a recession in these last few months of the year if we're not already in one right now?
Well, that's the thing, because you can be in a very slow period and not grow, but it's not technically a recession. But when you get caught in that slow period and it builds on itself. So yes, there's a very high likelihood of that.
What about these, we've seen so much about the protests, which are now growing, these protests down on Wall Street here in New York City. They've grown to a number of other cities.
Yeah.
What are people actually protesting, though? Is there a common message there?
First of all, things are bad. So maybe the common message is that things are not good and people are not happy about that. But in terms of what the end game is, that's the real question. What do these people want? And they don't have, I mean, it's not necessarily like put an end to the war, like you would see in a protest. So there's so many differentiating opinions there, but at the bottom of it, at the heart of it, people are just not happy and they don't have jobs and they have time.
And they want to say, and they want people to know
exactly
that they are not happy.
Rebecca, thank you.
Yep.